reward. And then a third party that qualifies must hold that fund. And it is extremely, very, very timely. You have 45 days identification period. The investor must formally identify a new property within 45 days of closing on the sale of the old one. Then you have 180 days acquisition period. The investor again must close on the new property within 180 days. Then it must be investment focused. The exchange property cannot be a primary residence or property that is held primarily for sale. Then 1031 is a tax deferral. It is not a tax elimination. That is why we always preach that it is just a period for you to accumulate your investment money before you start spending. You know that when you're going to, as a investor or as a business person, the IRS is expecting 35% of your profit as taxes. So you want to be able to put all this money together so that you can continue to invest. So it doesn't mean that because you're reinvesting that you will not pay taxes. You will, but you are deferring the taxes.
Got you. Okay, so which entity saves investors the most money? Is it LLC, S Corp, or a partnership?
In all honesty, there is no entity that saves you more money. What saves you money is your ability to document. But I'm going to say this. If you have an LLC, as far as tax filing is concerned, your whole income flows into your 1040. It is still treated as if you are the owner because you just do a Schedule C on your tax return. But when you have an S Corp, which is the best for you to have because it identifies your business strictly categorically away from you. LLC is a glorified sole proprietorship. It is still tied to you. But when you go to S Corp, but you need to note that you must file your taxes by March 15, not April 15. So there's that 1 month gap. Now it gives you the opportunity to expense every detail of things. It is more detailed in the tax software. And then that will flow to your Schedule K1 and given to you either as a profit or as a loss. Now, talking about partnership, again, none of these classifications actually make you save money. What makes you save money is your ability to segregate, your ability to keep perfect documentation. If you don't have an accountant, you only have a tax preparer, make sure that you have a note and you are able. So I always do this example when I'm giving people this type of, so I'm going to bring a notebook. You get your notebook like this, if you can see it, just rule in between. On your left-hand side, write your income. On your left-hand side, write your expenses. Make sure that they are detailed and make sure that you're able to keep your receipt. If you do partnership, again, you're going to file 1065 between 2 people or between 3 people, depending on how many people you are. You're going to be sharing your losses. You're going to be sharing your profit. So it's not that it saves you money from one to the other. It's just that you must be able to keep proper documentation. Again, if you are doing partnership and you have 1065, your deadline is March 15, except you file for an extension, which gives you automatic 6 months, both for S Corp and 1065, and your 6 months is now September 15 instead of the regular October 15.
Got you. Now, I'm going to break this down this way. I'm saying, okay, I'm a hold investor and I got about 3 to 5 properties. What are the common mistakes that I could make, and what are the easiest ways to avoid those mistakes?
One of the common mistakes that people make in real estate, and I'm talking about taxes. There are so many mistakes that we make as real estate investors. But let's talk about taxes, deep dive. What are the things that you need to be able to claim in order for you to say, yes, I am saving money? We talked about the interest the other time. We talked about the mortgage. We talked about your repairs, which, you have to be able to document the money that you pay your contractors, all those you will be able, even when you have a legal fee, when you close a property and you have your HUD, everything that is written there, your the money that the title company take, their insurance, the transfer fees, as far as it is a real estate investment, not personal, you will be able to deduct all those. I can go ahead and give you a whole list of what you can deduct. But what are the mistakes that people make, which is what we try to avoid all the time? If you have a real estate, you should be able to differentiate between repair and improvement. Any time that you have an improvement, it is depreciation. You cannot expense them. And we talked about depreciation going as far as 39 years or 7.5. There are some of them that can be 5 years, like you repair a whole unit of AC systems. That you can depreciate within 5 years. You change one whole floor, that you also have to depreciate. But when you want to talk about repairs, quickly, when you fix a leaking roof, when you repair a broken window, those are repairs. You can expense them the same year. You do a small patching of a wall, you replace a little bit of a small portion of damaged floor, you fix HVAC thermostat. You did not replace the whole HVAC system. You repair a portion of the fence, you touch up on the painting, you replace a door handle. Those ones, they don't add value to your property. You're not going to increase your rent because you fix a leaking roof. So those are repairs and you can expense them. They become part of your expenses. Now, when you upgrade your property, which is categorized as improvement, and that adds value to your property, then you're talking about adding a new window, adding a new room, installing a new HVAC system, replacing all the windows in the house, building a new deck, and the list continues. Those will be improvements and they have to be depreciated. If you are spending 30,000 on a property, please do not expense it. It is improvement, because you can't fix door handle for 30,000. You can't fix one small bathroom leakage and stuff like that for 30,000. But when you do that, it triggers audits. And trust me, IRS is aware, because they have trained professionals that will tell you that they train on all these things that you and I are doing for 1 hour or 2 hours. They train on them on daily basis, and they have the list. There is a whole long list. So that's one of the major things that I know that investors do that trigger audits, and you don't want audit to be triggered, because that just takes all the money that you have been saving.
So in a nutshell, you're saying that most of the investors mess up when they actually expense. Let's say I'm flipping a property and it's 80,000. So they're expensing the 80,000 instead of using that as an improvement. Is that what you're saying?
That's what most of them do, and they get audited.
Gotcha.
So rule of thumb, anytime that you spend anything more than 10,000, you need to start talking about improvement instead of expense.
Now, what is the difference in that? Are they going after the expense because they're going to owe less money, or is there another reason they're going after the expense?
It reduces your tax liability. So let's take figures. For instance, I buy a property for 100,000. I say it is an investment property. That 100,000 does not go into expenses. If I am holding the property, then I have to depreciate that 100,000, including the value of the property as my equity increases. But if I now come and say to the IRS, but if I buy that property the same year and I am selling the property the same year, then I'm bringing in how much I may say I sold it for 220,000. And let's assume that I spent 100,000 fixing it. You see, that is 200,000. So I'm making 220,000. You can't lump them in. You have to say 100,000 for the cost of purchase, which your HUD will take care of if you're bringing your documentation in. Then the expenses for that 100,000 of repair or improvement, as it may be, how much you're paying your paint man, whatever you spent at Home Depot or Lowe's, all those things, you have to break them down. At the end of the day, you still have taxable income of 20,000, which you have to pay taxes on. But if you are not selling this property the same year, then you have to do a depreciation, because you can't come to the IRS and say, I purchased for 100,000, I'm holding it, but here are my expenses for 100,000. That's also like make it to be zero. That means that you're cheating the IRS.
Got you. So in a nutshell, they need to come see you, Joy, right?
I'm available all the time, and we can talk. You don't. So what I say to people is that even the fact that I'm a tax preparer, don't fight with your tax preparer yet, because they may be doing it right. But when you come to me and you seek that second opinion and you think that I think I'm better than your tax preparer, then we are always hungry for new clients.
How can the folks reach you, Joy?
My phone number is always available, 240-755-3544. And this is Jovety Consults. The consult is with a Z, not an S. And we are online. Our website is ready, available. We can talk. We can give you some education. But this is the deal. When you are seeking for second opinion, please tell us all the stories. Don't hold some of them back. Because if we don't have all the stories, then we may not be able to help you. And this is one thing that I tell folks, please don't get into IRS problem. Don't get into their trouble. Those guys have nothing but time in their hands. And if you know that by error, after listening to this conversation this night, that you think that something is wrong with your taxes, let's look at it so that we can file an amendment for you before the IRS come for you. Because once the IRS come for you to say that we are auditing, you are already at a deficit of 1,500 and some change. That is the underlying cost of audits. And then they begin to pile up what you got and what you did not get and all the interest. And you begin to say, I only got $5,000 back, but now they want me to pay 10,000. That's because they put some fine and fees into it.
Got you. Well, Joy, all of Joy's information is down in the description as well. All of her contact, the website and everything. So if you need to reach her, please reach out to her. If you can't get her, get me, I'll get you to her. But we thank you again for taking the time to, first of all, thank Ms. Joy for taking the time to share all the wealth of knowledge to help you folks out there, because I know there's a lot of investors in the DMV, a lot of newbie investors in the DMV, because every time you turn around, somebody's trying to get into the investment world. And you need the right resources to make sure that you're doing the right things when you're trying to start this business. And I think Joy has really spelled out and answered all of the questions to help you folks out. Joy, you have anything else before we chime off?
I just want to say that real estate is not only buying and selling, it is a strategy, and it is wealth, and it is a legacy. You just have to master it and make sure that you keep your records. Now, for most of those receipts that you get from those shops, they wipe out like speed. Make sure that you are taking a picture once you get those receipts. If there is opportunity for them to email it to you, please let them email it to you. Because most times IRS don't come auditing until about 2-3 years. You would have forgotten that you did that business. And what they ask for all the time is receipt. So make sure that you are keeping those documents. You are really spending those money and time. Make sure that you're able to keep at least a little profit, and don't be greedy. I know we're all hungry, but don't be greedy.
Thank you, Ms. Joy. Hey, folks, it's another Hump Day Real Estate with Kendall in the DMV, and we're signing off. See you again next Wednesday.
Thank you so much, Mr. Kendall. You are doing a very wonderful job giving all these things out so that people can learn. And I wish that people will learn and come to your website, to your live video. And I know you always have them recorded and they are on your YouTube page. I will also be sharing on my own Facebook page so that people need to learn. We all need to be educated. And thank you so much for the wonderful job you're doing.